What's going on, everybody? This is David Fuchs from Carson Wealth with your monthly market update. It's August 2nd. We're going to talk about July, and it was a genuinely wild month. We had ups, we had downs, we had a little bit of everything. We had an inflation win. We'll talk about that. We will talk about the geopolitical curveball, how that's affecting markets, the tense Fed decision at the FOMC meeting last week, and we had some real divergence in how investors are treating AI spending. You probably see a different background. I am actually at the shore with my family this week, but the market update does not stop for anything. So let's walk through all of that. Let's walk through how it's all affecting the markets and how ultimately we are positioning your portfolios. All right, so let's start with performance. The S&P 500, that's a benchmark we all watch, finished July up about 0.5%. We're still up around 10% for the year. And that headline number undersells a little bit just how choppy the month of July actually was. We were up, we were down, we had a huge swing at the end of the month, and we basically ended up flat. But 1 month, bumpy month, that doesn't change the bigger picture. The trend for the year is still solidly positive, and that bumpiness came really from two competing storylines. Earlier in July, we got a genuinely great inflation report. Prices cooled to 3.5% year over year in June. That was down from 4.2% in May. That's the sharpest 1 month improvement since 2020. Then things flipped. Fighting between the US and Iran, it flared back up. Oil surged roughly 20% back above $90 a barrel. You probably felt that at the pump. Now, when you look back, and you see what the final number is when you're filling up your gas. It went from 380 earlier in the month back up to 410 by the end of the month. Why does that matter? Because energy that feeds directly into inflation. So that oil spike threatens to undo the progress that we just started celebrating with that really good CPI number earlier in July. And that sort of oil inflation tug of war set the stage for the Fed. They met just last week at their July 29th meeting, and they held the rate steady. That was largely expected going in. I know that the market was pricing in like a 30% rate hike. We thought it was very unlikely that they were going to, and they didn't. The vote, however, was not unanimous. We have 12 voters, 3 pushed for tougher stance given the fresh inflation risk. So they actually voted for rate hikes. And that split, it rattled the market and triggered a sharp pullback at month's end on the 29th. On that day, we saw the NASDAQ down about 2.5%. We saw the S&P down almost 2%. And it also shifts the expectations for the next meeting, which they're not going to meet in August. They're going to meet in September on September 16th. And markets right now, as of today, they're pricing in about a 65% chance of a rate hike, which is actually the significance of that, in my opinion, is coming into the year, we had expectations of possibly 2 rate cuts. Now we have a 65% chance of a rate hike. So the path to lower rates just got a lot less certain. And rate direction, how it affects us, how we position you guys, is it's a real input in how we think about your fixed income and your cash position. And it's not just a headline that we're watching. The other big story was, as we worked through earnings season, AI spending. And investors, they're getting a little bit choosier about it. I'll give you a couple of companies, for example, Google, Meta, Microsoft. They're all pouring in combined $650 billion into their AI infrastructure this year, but results were mixed as they reported earnings. Alphabet, which is Google's parent company, and Meta, they both saw stock drops despite strong quarters on concerns about the AI payoff. And then you had Microsoft, who held their spending pretty steady and showed strong cloud growth. They were rewarded with a stock jump. They actually had the largest one-day market cap increase in the history of the stock market. Stock jumped about 15%. Company market cap jumped about $500 billion, which is an astonishing number. The takeaway, market, it's not turning against AI, but it's asking these companies to prove that the spending is paying off. And to us, that's a healthy, normal maturing of a big theme. So because, and why it matters also is because these 3 are widely held bellwethers, they make up a big part of the index. It swings how they're treated can ripple into volatility across portfolios generally, whether you own the stocks outright or not, which is why we don't chase the trend. We make sure your exposure stays properly sized within your broader plan. And let's just wrap this up. So let's talk about moving forward. Heading into August, there's two things on our radar that we want you to know about. So, one, of course, is whether the Iran conflict keeps escalating. That has a huge impact on a lot of things, and especially oil. And directly feeding into that is the next inflation report, which we're going to get on August 12th. So, in about a week and a half from now, which will tell us whether June's improvement was real progress or just a dip before that oil started to push back up a little bit. So, bottom line, it was a month full of moving pieces. It was a really wild month. And that's exactly when it matters most to have someone watching it on your behalf. Reach out anytime with questions. Again, I'm David Fuchs from Carson Wealth. We will see you next month for our August update, which will be at the beginning of September. Enjoy the rest of your summer.